Hello, and welcome back to Malakhi K's Minority Report. The goal is to review major news from the cannabis sector with some critical analysis. Today, we will be reviewing news stories concerning Aurora Cannabis, Columbia Care, Cronos, HeavenlyRx, Dixie Brands, and Insys. Aurora provided guidance ahead of its mid-September earnings as it regularly does, so nothing nefarious here. The company anticipates net revenues for the quarter ended June 30th of between $100 million and $175 million. That's up $35 million compared to the previous quarter. Good numbers, but should be taken with a grain of salt without expenses. There is anticipated growth across all key brands, including medical, Canadian, international, and consumer markets. Columbia Care released earnings, Q2 revenue of $19.3 million, up 50% from the first quarter, net loss of $33 million, but is optimistically accounted for by its rapid growth. $125 million of cash on hand and no debt. But does anybody care? Currently working on a backgrounder on Columbia Care to figure out why no one cares. Cronos, quarter two net revenue increased 202% year over year to $10.2 million. Net revenue increased 58% quarter over quarter. After Afria's earning report showed a profit, there was hope that other LPs would follow suit, creating a run-up before earnings. Cronos was unable to keep this positive catalyst going. Wah, wah, wah. The CBD wellness company HeavenlyRx announced an investment into Seattle-based craft soda maker Jones Soda, acquiring 15 million common shares, which is about 25% of the company's total common shares. HeavenlyRx is looking to establish itself as a leader in CBD-infused beverages. In a similar deal, Arizona Tea reached a licensing deal with Dixie Brands, a cannabis company that makes and sells drinks, gummies, and topical creams that are infused with marijuana. Through the partnership, Dixie will manufacture and distribute goods branded with Arizona's name. And lastly, as you should know, Insys is in Chapter 11 bankruptcy proceedings after their involvement in the opiate crisis. We have been following the story closely as Insys has a number of patents for synthetic THC and CBD. Synthetic THC and CBD have the potential to be disruptors in the multi-billion-dollar emerging cannabis hemp space. Synthetic CBD may even be more lucrative with its applications in edibles, topicals, and pet foods. The assets of Insys were about to go to auction. Just prior to that, the company made a deal with Chilean Group Holdings for its THC and CBD assets. According to the SEC, on August 6th, the company entered into an asset purchase agreement with Chilean Group Holdings, Inc., a Delaware corporation, pursuant to which the company agreed to sell the CBD formulations across current preclinical, clinical, third-party grants, and investigator-initiated study activities. THC programs of Syndros and buprenorphine products and related equipment and other assets in consideration for a purchase price of $12 million in cash. That seems really low for this THC CBD portfolio, and Chilean was only registered last month. There is a very good chance they would have fetched much more in the auction. So it will be interesting to see which LP, MSO, or pharma company actually ends up with these assets. If you know anything about Chilean Group Holdings, let us know in the comments, because we couldn't find anything. For fun, Google Chilean and their CEO, Brandon Kidd, to see what comes up. This video is for entertainment purposes only. Please be aware that none of the content in this video constitutes financial advice. Do your own due diligence. Thank you, and try to leave the world a better place than it was when you got here.